I'm Alan Kenny, Editorial Director with REIT.com, and I'm in Chicago for REITWeek 2013, NAREIT's Investor Forum. Join me is Ed Pettinella, President and CEO of Home Properties. So Ed, we're starting to hear in the news that the single-family housing market is back on an upswing. How's that impacting your business?
Well, it's true. The single-family market is doing much stronger and a more robust market. For us, though, the single-family market is not having that much of an impact. First, I think you have to keep in mind that about 60% of our residents have either never owned a home or have intentions of owning a home. It's the other 40% that we're really talking about. But two things that are creating big barriers are, one, underwriting on the part of the banking system is making it very difficult for first-time home buyers to qualify. You need 20 to 25% down. And two, we purposely try to buy C properties in B economic environments, which basically means they're better neighborhoods and better school systems. So as you can imagine, the home prices in those areas are $325,000 to $425,000. So it makes it very difficult for our resident base to qualify. So most of that 40% is just not able to move. So a lot of them are there for necessity purposes. Further evidence that the single-family home market is not bothering us right now, we have the lowest turnover ratio in the industry, 39%, versus an industry average of 55%. We're near record highs on occupancy, around 96% for our company after 19 years. So at this point, rental rates, occupancy do not seem to be adversely impacted by the parallel single-family market, which is going strong.
And I'm sure those are all issues that have come up in your meetings with investors and analysts here at REITweek. Can you give us an idea of some of the kind of questions that you've been talking about and also some of the themes that are coming up in those meetings?
I think the mood is relatively upbeat. One, the recent downdraft in the equity markets for the country and for our sector in particular has created what I would think more buying opportunities among our sector, the 12 of us. But also the fundamentals are extremely strong right now. I think the ability to raise rents are still there. The unemployment level, although it's not in a great space now, is getting better. And the economic condition for the country is looking much better. So I think the propensity to do well in this sector is there, and I think that's why the bases, the people that have been here are really positive on the industry, and I think it bodes well for our industry over the near term.
Home Properties is known as kind of a defensive stock. Mm-hmm. Do you see yourself, though, as more of a full cycle kind of player? Now
we do. It's funny, I was with the company for about 12 years, and still am. I believe around 2004, at the end of the last recession, when we basically fell off the lead pack in terms of performance, we tried to find out what the reasons for that were. So what we did is we changed our geographic footprint. We've moved hundreds of millions of dollars out of the Rust Belt into the East Coast. We changed technology, both in marketing, our financial systems, and in our core operating business. All of that, I think, gave us a better competitive advantage, stronger people. And these played a big role, I think, in terms of our performance this cycle. So we are not only performing well in the Great Recession, which we did very well, but we seem to be holding up extremely well in the up markets going forward. So all in all, I think home has proven that it is becoming a much better performer throughout a full cycle today.
All right, well, Ed, thank you so much for your time.
Thank you, Alan.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.